Hello viewers, students and friends. This is Dr. Kashinath Neharkar, Assistant Professor Sri Shivaji Law College, Parvani, and I welcome you in my YouTube channel, Law Education Volunteer Dr. Kashinath Neharkar. In this lecture, we are going to discuss the concept of income under the Income Tax Act 1961. So friends, please subscribe this channel and press bell icon to receive further notifications relating to video lectures. So let us start with today's concept. Friends, you know the taxation is inherent power of government to levy and collect tax from its subjects, from its citizens, from the persons under its control. So the Income Tax Act is enacted by central government to give effect to entry number 82 of Union List under 7th schedule of Indian Constitution, and accordingly in 1961 the government have enacted law to impose tax on income other than agricultural income. Therefore, we must see what is the concept of income, which is subject matter of taxation under the name income tax. Therefore, in general we must see what is the income. And according to the Oxford Dictionary, income means a thing that comes in. So you should understand that the income means that thing that comes in from outside. Therefore it is called as a income. So income, see, the income means the property, money, whatever the valuable things that come to that person from outside, from other persons. So that can be his income. Afterwards we are going to discuss whether it is taxable, whether it is not taxable, whatever the thing is, that we are going to discuss there. But here we must see, this is the definition. Regarding to that, in Commissioner of Income Tax versus Shaw Wallace and Company, where the Privy Council also observed what is the definition of income, or that can be called as his income. So according to this definition, the income is a periodical monetary return coming in with some sort of regularity and or expected regularity from definite source. So this is what the definition that is given by Privy Council in that case. So if you go through this definition, you can see income is nothing but the monetary returns that are received from outside and with some sort of regularity or with some sort of expected regularity. This was the initial definition that is given by Privy Council, but afterwards the recurring nature of income was considered as not necessary. So even the incidental income is also considered as an income for the purpose of taxation. So we must see what is the definition of income that is provided by income tax. See, if you go through the definition, this definition is not the exhaustive definition, this is inclusive definition, and it tries to include as many as incomes as the income. So it includes the form of income that person may receive, or it includes source of incomes also. So we can see the list of incomes that is provided by section 2 clause 24 of that act, and accordingly the profit and gains that can be received by a person from business, profession, etc., that is called as income here. Then the dividends, you are the students of company law, and where you can see the person who is owner of share in any company can get the income, business profit of that in company. So this is also the income of that person. This can be. Then the voluntary contributions received by the trust. Say trust can accept the contributions the trust can be accept the donations, etc. So this is also the concept of income. What the people pay some amount towards the trust, that is also the income of that trust. It's taxable. What amount will be taxed, when it will be exempted, that will be differently discussed, but this is the income of that trust. Then the perquisites in the hands of employees, what the amount which is given by employer extra than the salary, then that can be called as a perquisites. So these are also considered as the income of that employee. Then any special allowances or benefits that are given by employer to his employee, this is also the income. So all these benefits are given by employer which are extra than what he is expected to pay salary to that employee. Therefore these are the extra income of employee he gets from his employer. Then city compensatory allowances, dearness allowances, specifically such income can be received by salaried person, how to change their residence, how to go at that place where the living may be costlier than the other places. So city compensatory allowances also can be given, dearness allowances also can be given. So this is also the income for the purpose of section 24. Then any benefit or perquisites to directors. Directors are of two kind, the forming the directors who are responsible for the management and who are the founding directors of that company, who indirectly can be called as a owner of that company also. But there are certain kinds of directors who can work as invitee directors also. So in such circumstances the director may get some allowances, so these allowances are also considered as the income. Then any benefit or perquisites to representatives of assessee. So assessee means the person who is liable to pay tax on his income, and if he try to divert his income to his relatives in such circumstances, and not because of special qualification, but because of the relationship, in such circumstances what the amount which is paid to near ones, this is also called as the income of that person, that can be counted in computation of his income. Then any sum chargeable under section 28, 41, 49, this is the income from business. Then capital gains, when a person receive gain from transfer of capital assets, whether it is long time capital asset, whether it is long term capital asset or short term capital asset, if that person receives the gain from transfer of such asset, that will be taxed as his income, though there are certain exceptions that are provided by Income Tax Act. Afterwards we are going to discuss these exceptions also. Then the insurance profit, this is also the income. This is relating to profit of insurance companies, business and profession, etc. Then banking income of cooperative society, this is also the income. There are many cooperative societies which work for their members, etc., and they can issue loans, etc., and they can charge the interest to their members. So if they get the benefit by the banking activities, it is also considered as income of such persons, so that can be taxed. Then the winning from lottery. See, while discussing the definition, we have discussed that income is nothing but the thing that comes from outside, comes in, and with some sort of regularity. This was the initial stance of definition, but afterwards the requirement of recurring income is not necessary. That is the reason why winning from lottery, if you do not win from lottery, there is no matter of tax on your income. But if you earn the income from lottery, then that can be taxed, that is surely going to be taxed. Then the employee's contribution towards fund, this is also the income for the purpose of section 24. Then amount received under keyman insurance policy. There are many businesses who are dependent for their huge profit benefit on the skills, etc., of a particular employee, whosoever that person who is very important for that firm business, so that industry, that business can have the insurance of that person. So in the event if that person leaves job, or in the event if that person meets with the death, that business may, or that business entity may have to face huge loss. Therefore they can have the keyman insurance policy, and if they got the insurance, that amount, then that is also the income of that companies. And lastly, any amount exceeding rupees 50,000 by of gift, by of which is received by individuals, Hindu undivided family, this is also called as income. It means gifts up to 50,000, these are exempted from the tax, but the gift which is more than rupees 50,000, that is exempted from the tax. And it is not necessary that person is getting income by a single gift. Whatever the gifts that person should have received through the gifts, if that amount exceeds rupees 50,000, that will be taxed under the head income from other sources. So if you go through the definition, you can find, or the definition is given in very wide manner to include incomes as well as deemed incomes also. So let me see some characteristics or some principles of income. See, on the basis of that definition, there are some characteristics, or there are some principles of income. So the first principle or the characteristic is income can be in any form. So you can receive income in the form of cash, or it can be in the form of kind. So it is not necessary that you should receive income always in the form of money, notes, currency. Then second principle is the income will also include illegal income also. See, income can be legal, no matter, it can be illegal. So income tax act doesn't make any difference for the charging the income. So you cannot take the defense that, see, this is my illegal income, so you should not tax upon the illegal. So it doesn't matter. The fact is that whether you have received the income in previous year or not, whatever the form, whatever the nature of that income is, it is immaterial. So if you are receiving legal income, and if it is taxable, you have to pay tax. If you are receiving illegal income, and if it is taxable, you have to pay tax, no matter. Then next is the disputed title to income does not make any difference. See, disputed title to income does not make any difference. So there can be a property in your possession, and its dispute may be pending in a court for its ownership. So during that period, if you are receiving the income from that property, you are liable to pay tax. Then income must come from outside. Income must come from outside. So this is another characteristic. So income always comes from outside. No person can give income, or no person can earn income from himself. So this is also an important principle. Then income should be real and not fictional, except certain circumstances. That person should have actually received the income. So income tax cannot impose the tax on the basis of friction, but there are certain exceptions, like the income from house property can be taxed on the notional basis. Apart from that, the income should be real and not frictional. Then receipt in lump sum or installment, it is not it does not make any difference. So it is income whether you receive in the income of lump sum amount, or you are getting income in installments. If it is taxable, it crosses the taxability limit, that you have to pay the tax. Then there is a difference between capital receipts and revenue receipts, and revenue receipts are considered as income from income that can be taxed. Capital assets are something different from revenue assets. Then all revenue receipts are taxable unless specifically exempted, while all capital receipts are exempted unless specifically taxed. See, revenue, it means nothing but the income. So whatever the nature of that income, that is taxable under the act, except certain exemptions are given. There is a separate chapter in Income Tax Act from section 10 to 13 that exempts certain incomes. It means the income which are mentioned or categorized by that chapter, that income will not be included into the total income of that person. Then income includes loss also. This is for the purpose of income from business and profession. So at the time of computation of income, if that person has to, or that person has to bear some loss, that person is entitled to get compensation again for that loss. Therefore the income includes loss also. If in that particular it is not possible to compensate that loss, that amount can be carried forwarded in next year to meet with the loss. Then same income cannot be taxed twice. So this is the principle. The income cannot be taxed twice. So that income should be taxed under any of the sources. So same income cannot be taxed under two or more sources. That income can be either from business or profession or the salary or whatever the nature. So a single income will be taxed singly. No, there cannot be double taxation. So this is very important concept of income, friends. So if you have any doubt, you can mention it in comments. So friends, thank you very much